Here's how I reduced my tax bill with smart planning. And no, it's not some complicated scheme that only works for the ultra-wealthy. It's practical, real-world strategies that anyone can use. Trust me, when I first started learning about taxes, I had no idea how much I was leaving on the table. But after a lot of trial and error, I finally figured out how to cut my tax bill legally and effectively. Stick around, because in this video, I'm going to share exactly how I did it. And there's something at the end of this video you'll want to know that can change everything for you too. So, let's dive right into it. The first thing I did was to understand the difference between tax deductions and tax credits. A lot of people get confused here, but this is absolutely crucial for reducing your tax bill. Deductions reduce your taxable income, which means you're taxed on a smaller amount. But credits? They directly reduce the amount of tax you owe. If you're not already using tax credits like the Earned Income Credit or Education Credits, you could be missing out. Those are like free money in your pocket. I had no idea these existed until I started digging deeper into tax planning. Another big thing I did was to start contributing to tax-advantaged accounts. If you haven't already maxed out your 401k or IRA, now's the time. These accounts help you reduce your taxable income, and some of them even grow tax-free. Let me give you an example. I started contributing the maximum I could to my 401k. This reduced my taxable income by thousands. And that's not even counting the employer match, which is essentially free money. But it gets even better. Once that money is in the 401k, I don't have to pay taxes on it until I withdraw it later. That means I'm saving money today and deferring taxes to a later point in time. Now, here's the trick that saved me the most money, and you'll want to pay close attention here. It's called tax loss harvesting. This is something I didn't even know about until a tax advisor pointed it out. Basically, if you have investments in your portfolio that are down in value, you can sell them at a loss to offset other gains you've made. This strategy works especially well if you have a mix of investments in both taxable and tax-advantaged accounts. By selling off those losses strategically, you can reduce your tax bill on your gains. It sounds complicated, but it's actually a simple way to make your investments work for you and minimize your taxes. Lastly, and this is something that most people completely overlook, is timing. When you sell, investments can have a huge impact on your tax bill. If you sell stocks that you've held for more than a year, you pay long-term capital gains tax, which is much lower than the tax on short-term gains. I made sure to hold on to my investments long enough to qualify for long-term rates, which significantly reduced the tax I paid. And this is where a little planning can go a long way. Now, here's the thing. I'm not incentivized by any affiliate commissions in this video. Everything I'm sharing with you is based on strategies I've personally used and seen work. I'm not selling you a course or trying to make a quick buck. This is the real deal. And if you're serious about reducing your tax bill, these strategies are something you need to be doing right now, not later. I know taxes can be confusing, and there's always that feeling of, am I doing this right? But trust me, if I can do it, you can too. Just take a little time to implement these strategies, and you'll start seeing the difference in your tax bill. If you found value in this video, please hit that subscribe button. It's a small gesture that really helps me keep creating content like this that doesn't come with hidden incentives. Thanks for watching, and I'll see you in the next one.